What's going on, everybody? The content you are about to consume is from a recently recorded Twitter space. So for this one, it's just going to be audio, no visuals. But going forward, all of the spaces will be uploaded to YouTube with images to match.
Yeah, I figured I can pop on here and do one of these so you stop listening to a lot of the boneheads that are on here. I don't know if I can curse or not on these, or I'm going to get banned again. So I probably will anyways, but let's see. All right, we just had... All right, NVIDIA's going up now. NVIDIA is a good one that we can look into, and we can put some of the strategy behind it and why it would make sense. So ultimately, that's the whole idea behind the way that I trade and the way that I've learned to trade over time, is to really ensure that no matter what, whether I'm right, whether I'm wrong, I can justify the result. If you can't justify the result, to me, there's something wrong there, right? And that was me for a long time. And, I just didn't have answers, and I needed answers because it was driving me insane, still did okay, and I'm not trying to talk down or trash any other strategy or anything like that. But I personally needed that extra little layer of why something happened, why it makes sense, why wouldn't it make sense, just for my own well-being, because it was as I'm sure a lot of you are either going through now or have gone through in the past, this can be really mentally taxing. And every time you feel like you get really, really close to it, you just can't break through, and it drives you nuts. But there is light at the end of the tunnel. And hopefully at least one thing that I talk about tonight will resonate with you, and you'll learn something from it. So all right, so all my charts are uploaded here, and as they come, I will yeah, Gilly, I just saw your message. You're in here, right? Yeah. I don't know how to live stream on here, if that's even possible. Yeah, I can explain. Yeah, no, 3xp for sure. Gilly, I can also go over the trade that I took. I'll actually post that here first, and I'll go through it. That trade was... hold on, I'm gonna post it up top so you guys can at least see it for a second. Obviously I sped it up like 10 times because it did take like 20 minutes, but I just do that to fit it in under a minute. So here we go. I'm posting it up top now. It should be right there. All right. So let me go over here real quick and do this. So ironically, all three trades that I took today, I made some money on, and not one of them was short. So it happens, I guess. I wouldn't necessarily say I had a bullish bias by any means, and that's something that we can get into on another one of these at some point, where I kind of show you how I do the top-down analysis to try and formulate some sort of idea of what's going to happen the following day. Now, I'll be the first to tell you, and if anybody tells you otherwise, they're probably lying. There's no way you're going to be right every day. It's just not feasible, right? You can be close. You can have really good ideas, and you can justify a lot of things, but it's not always going to work out the way you want it to. So, with that being said, entering today, I really didn't know what was going on, and when I'm indifferent like that, usually, I don't want to say I'm trigger shy, but I really make sure that things line up. And what I mean by things line up, I don't have my limit order already set, ready to go for when price taps it and goes. I'm much more careful. I would rather see price get into one of those levels that I had at some specific point, and actually show me that it wants to leave before getting into it, right? If I have an idea of what the draw is likely to be, then I'm fine with missing out on a couple points at the bottom, rather than just continuously getting stopped out, because that can occur as well. Even this August was nightmarish in terms of stop outs. And it wasn't that I was wrong all the time. It was just a lot of the times, whether it was, due to the larger range that we were trading inside of on the big board, or, maybe my stop was just too tight and I got stopped out quite a bit. No worries, Ryan. I just saw you text. But again, it's a part of the game. And that's why when I'm personally looking to trade on days, especially when I don't really have a good feel of, what's next, I kind of try and wait for it to show me that it actually wants to leave a specific level prior than trying to jump the gun on it and, you know, almost take every last drop of points on it. I'll take the meat, and leave a little bit on either end, which is fine. But as long as I can secure a beefy move in that situation, I'm more than fine with that, right? So the trade that I took up top, again, obviously today was uber bearish, not a great day for the indices whatsoever. Dollar is still pumping, which is very problematic, and it's very hard to be bullish when the dollar is moving the way that it is. And that's one of, I don't use any indicators on the chart. You might notice from the stuff that I post. And the one indicator that I really do rely on is the dollar, which, in the past I had used the VIX. To me, the VIX is a little broken right now. And the reason for that, or at least my explanation for that, is I don't think people feel comfortable going far out or farther dated on any type of trade at this point. I think there's a lot of economic uncertainty. Nobody really knows what's going to happen next. And, with that, the VIX kind of needs those far out puts to kind of justify volatility. So when you're not getting them, it's not as reliable. But the dollar is sweet, and that's something that I always use. And yesterday, when we spoke in the group, we were talking about how the dollar was still moving higher yesterday with indices. So to me, that is red flag number one. Somebody's lying in this situation. Now, who's it going to be, right? And with hindsight, of course, super easy to say that now, but it was obviously the indices lying. On the flip side of that, we can look at yesterday's 4 o'clock candle. It was that insane rip that ripped like 100 points towards the end of the day. Of course, with hindsight, that was probably a red flag too. Think about all of these stop orders that are getting triggered on that large run up prior to obviously what we saw today, a huge down day. And already with futures opened, we gapped down and we're down 100 points. So, but anyways, I try not to get off topic. And again, if anybody has any questions or, wants to come up and say some stuff, feel free, just request a mic and I'll give it to you. But, anyways, just to go into this trade a little bit. So, to me, this trade, it occurred at about 10:55 was really the mark. Now, we had already had that morning sell-off where we dropped quite hard, actually moving down through the new week open gap, and that is a staple of smart money concepts, ICT, whatever you want to call it. But it's an excellent level to have on your chart, and just watch how price moves towards it and through it, against it. It really acts as a nice support / resistance line for the week. And obviously this week, or on this morning, 9:30 candle, absolutely knifed right through it. So, from that point, right, we also took out a couple of lows from yesterday. So the reason why I say that's noteworthy is, to me, especially somebody who's trading on a much shorter time horizon, right? Oftentimes my trades don't last more than 20 minutes. I try and keep it short and sweet, take my scalp and move on. Now, the fact that we took out those lows from yesterday with that knife candle, in addition to moving down through that new week open gap, I look back and I say, okay, we have a bearish market structure or a bearish trend starting or undergoing at the exact moment, right? So we finally find a low, right? Which was, let's see what time exactly it was, at 10:25, right? Do I necessarily know that's the low? Not necessarily. And that's why I'm not one to try and hawk those highs and lows to the exact tick, right? I'm not trying to catch the knife perfectly at the bottom, or, try and stop a train moving full speed ahead and try and short something that's going crazy, right? I like to wait and kind of let it show me some sort of confirmation. And the confirmation that I use is some sort of setup, whether that is a imbalance, right? It can go either direction, bullish or bearish. A breaker, again, either direction. Volume imbalance, something along those lines that is actually going to indicate to me that, okay, we might have a low established here, right? Because again, if we look back, and I'm looking at NASDAQ right now, that's going to, translate well to QQQ, and I'm sure the price movement is almost exact. It's, maybe a couple, little wicks here and there, but I highly doubt it. But if you look at that 950 low, right? If I wanted to jump the gun and try and get in at that 950 low, I would have gotten stopped out, right? If we scroll over a little bit and we look about 30 minutes later, we actually took that low and went obviously bounced from there. But I don't necessarily know the low. So I'm not trying to jump the gun on any of these and just get in where I think the low might be. I need some sort of confirmation. And do I miss some trades as a result of that? For sure. But I would personally much rather have confirmation and feel good about something that I'm trading, and also have a well-defined trade mapped out for me, right? Anybody in the group knows that I use those imbalances as my entry, exit. I look to the next one for my take profit. So I'm not really doing much to, reinvent the wheel here, but having that imbalance and that, extra layer of confidence it's paramount for me. I need that. And that way I keep everything well defined and I'm not, shooting from the hip at all, really. And, that's why, when I take losses, I do take losses. Everybody does. They're just never going to be out of control because my trade is mapped out just using my setups that occur. And uh, I know that if I'm taking trades when my setup is not happening, then I'm kind of dancing with the devil a little bit. I'm asking for some trouble. So, but anyways, just to go back a little bit, that 1030 or 1025 low, that next candle actually created a 5-minute order block. Nothing crazy, but an order block nonetheless. When price came back down, this is when I took my entry. And if we look at the 1-minute chart, so I'll explain why I would do something like that. So I use the 5-minute to look for these setups and to be as precise as possible. And I need to be as precise as possible. Trading NASDAQ, which is $20 per point. And today we moved probably like 400 points off the top of the head. So that could be a lot of money. And you can totally get whacked if you're not cautious and you're not protecting your downside risk, or, you name it. But for me, when I have those imbalances on the 5-minute, my setup, right, I then move down to a lower time frame, whether that's a 3-minute or a 1-minute, and I look for imbalances within that 5-minute candle. And that really helps me zero in and pinpoint a range that I can look to, take the trade. And for my entry, my exit, everything like that is all predetermined by what the candles are painting for me. So I look at the 1-minute chart. I see there is a bullish imbalance on the 1-minute time frame, relatively small, but in that situation, my risk really wasn't all that much. So obviously, we go through, and if you watch the video, you'll see it kind of took off quickly. And of course, those are the best trades when you really don't have to do too much managing, and it kind of takes off for you. But as a result of this, right, we make that move up higher. Now, you'll see I got stopped out a few cents under that 1,000 mark. And what was my indication as to where I should move my stop? Because that's something that I think personally is my greatest attribute as a trader. The ability to understand where the trade might go wrong and where I should probably get out and take my money, right? And for me, it was something as simple as, if you could see it, you'll be able to see it on the video. I have this blue shaded box, which was the new week open gap that I spoke about earlier. And price got up back into that new week open gap. And if you look, it perfectly rejected that. In addition to, if we look at our swing range from 910, which is pre-market, and again, this is why even if you trade QQQ or SPY, I totally would say that charting futures is a big plus, right? And the reason I say that is because while we're sleeping or when our markets are offline, they aren't in other places around the world that also have substantial money. So the market is moving, right? But when you look at SPY or SPX, QQQ, you're just getting gaps. And while gaps can be fine, if you're trading, say, on a larger time scale, if you're looking to swing and you don't want your entry to be as precise as possible, you just kind of want to get in at a specific point and look to play it down. But for me, I'm trying to be so pinpoint accurate with it because, again, it's heavily leveraged, right? I'm trading NQ and I'm trading SPX, two things that if you're not careful and you don't protect your downside, you can get wiped out pretty damn quickly. So having those sub levels within that gap, to me, is huge, right? So that was actually our little swing high that we made at 910 prior to that meltdown when market opened in New York, right? So if I were to map that range, right, using that high at 910 down to the low at 1025, we draw, I use the fibs. I don't necessarily trade off of fibs, but I do use it as a way to map the range. And, that when we talk about my model, that is actually a huge component to it. But I have the range mapped. We get up into our new week open gap, which also coincides with a bearish imbalance from 930, right? That large down close candle, that's a massive bearish imbalance. And on the flip side, it also lines up with 50% of our current range that we were trading within, right? So from that 910 high down to the 1025 low, that retracement higher gets right into discount, right? So in a bearish trend, over 50% would be our discount range or discount for your puts. Nobody wants to buy anything overpriced, right? You don't want to buy at a premium, and a premium would be to the low end of that. So I'm looking for discount buys in that situation. And we got right up into 50%, rejected the high of the new week open gap, got into that bearish imbalance, and we melted down, right? Now, obviously, I wasn't in for that downside trade, which I probably should have. And, 90% of the time, this is the model that I'm trading. But I've been working on something to catch those lows. Again, I'm not trying to catch the exact low, but I am trying to pick up on it where when we do get that first imbalance higher, I have a strong feeling or conviction that we're probably going to retrace up into discount of this specific range. So if I can nail that trade, knowing where I'm going to take profit right off that 50% mark, I'm going to do it, of course, right? That was a lot of points. The trade that I hit today was, at one point it was over 50 points. That's $1,000 on one contract, risking, $100, I think, at that point. So it was nothing crazy, and I was able to slide my stop just below on that new week open gap so that when price did reach down for it, that whole downside move, I was completely out of it, took my money, moved on, no sweat off my back, right? Now, that's the beauty of it, and having that understanding of where, uh, price might end up going. That is, to me, paramount. And I think when you learn how to read price action, the biggest the most eye-opening thing you're gonna incur in trading, right? um you know the thing that I say about it, and I'm sure other people say it about their strategy too, it's just once you see it, you can't unsee it. And I wish I could screen share with you right now because it's clear as day. I mean, you know what, actually I can do it. I'll post it and I'll pin it right up top. But I'll just show you, like, this is textbook my model. If you're more interested in learning more about it, I did it on YouTube, so you can totally check that out. But this is it. It's as simple as this, and it's just reading candles. You'll notice, I don't have any indicators on the chart. All I have is that little blue shaded new week open gap, so that way my chart doesn't get too cluttered. And I have specific time zones that are annotated. On the side, there are some key times that I look towards trading in, and it's nice having them right on the chart, right next to you. So hold on, let me just post and I'll show you that this is literally it, and how it worked out. Here, I'm posting it up right now. Um,
I
while
got
I
a question, Mando.
Yeah, you got it, man. What's good?
So, right, that new week open gap, that was a big failure today. Is looking back, you think, is there any point, in that failure when you rejecting off that new week open gap? Is there any point where you knew, oh, there's more downside today, or is there any hints, any way that you could have told somebody about it, you know?
Oh yeah, absolutely. So I actually just posted it. If you go up into the top part right up here, you'll see my model, and you'll see how I have it labeled like this, right? Now, that new week open gap, to me, it's going to act as like a weekly magnet, right? So if we're closing above previous week's new week open gap, to me, we're pretty bullish moving into the next week, right? That's a little bit of a additional tool that I use when I try and create that higher time frame weekly bias, and just have an understanding of where price might want to go to, because again, it's not always going to be right, but just having an idea in the back of your head that you can justify price moving in one certain direction, it really is helpful. I know people say don't be too biased, don't be too this, and that's fine, right? I would agree with that. You don't want to be overly biased in what would be a bearish trend, right? That's fine. But if you have the understanding to kind of back up your thesis, and again, you're able to justify it, if you can justify the other side of it, that's great. How many times in live do we go on there and I'm like, okay, so here's the bullish point of view, here's the bearish point of view, and I leave it up to everybody else to decide, because look, I can have my own opinion, but it doesn't necessarily mean I'm going to be right by any means. So, to me, the new week open gap is an excellent tool, and you see it in action here with this post that I just had. We sliced through it with an imbalance. I should have added that little imbalance up there as well, but as price retraced back up into it, I mean, this was like a triple threat, and I'm kind of upset that I didn't. I was kind of jumping up and down after hitting that nice long trade up to that point, so I didn't even look to trade it at that point. But I mean, it's clean, and it's something is super simple. I mean, it's just an added light, a level that you can just throw on one of these little indicators on here. I mean, the one that I'm using right now for it is, let me just click off. It's just NWOG/NDOG, and that's it. I mean, it just paints it on there for me. I keep like the last 5-6 weeks on there, and it's crazy when you see it in action. It's like, all right, why would I not have this on my chart? But yeah, this was like a triple threat, really. You had your bearish trend, you had your retracement into discount of that bearish trend, and then you had your meltdown. And in this specific situation, even, I mean, I'm not, again, I don't like to hold things forever. So the fact that, after hitting that swing low down at 96, which that's 80 points from that high, I probably would have been really aggressive moving up my stops and profit at that point. Um, you know, did I know that price was going to completely melt down the way that it did? No, absolutely not. I mean, going into today, I could have perfectly justified to you why price was going to move higher. I mean, we were talking about it yesterday. Actually, I was even looking at a longer swing, but it didn't happen. It didn't present it. So it is what it is. And even if I was to take a trade like that, look, I know where I'm going to stop out. That's the key to all of this, I guess. Where does the trade go wrong? At what point? And there are specific points that I have. If I pull up that NASDAQ daily chart, which I have over here, I'll put it up right now. But at what point do things go awry? And at this point for me, it was, if we take out another swing low, that just shows me that the range isn't set yet. And that's why, traditionally it is much more difficult to try and long bearish trends, and vice versa. Trying to short a bull train it's difficult, because you really don't know what that low is going to be until you get some sort of confirmation that's going to, you know, um, clarify it for you, I guess. So does that help at all, Teddy?
Yeah. So another question, right? So let's say you were just taking a long into a short, like you were short bias. Because I was short bias today, but essentially I didn't actually take this trade. But I want to know what were like, or what would be something you would have looked for, like if new week open gap rejection was one confluence, where would you have also said, okay, this is, we seen the new week open gap. Would you also wait for like a bullish breaker and then retest back? I don't know how you do with the
Yeah.
fib into the golden pocket, or explain more You
Right.
know, what would have, looking back, you know, what would have been a few confluences for you to say, okay, this is how I would have broken down or broke down this short?
Yeah, no, that's a great question, because this specific situation that we had today, it would have been much more difficult of a short to take for me, right? With hindsight, yeah, of course, everybody's going to say that's the easiest trade ever. Are you kidding me, right? And there were multiple layers of confluence to this, right? So for one, again, we took out lows from yesterday. So anytime we take out those swing lows, automatically, to me, that's a bearish trend, right? On a very short, we're looking at a very short blip in time, right? On a day, right? We're not looking at the weekly, monthly, you name it. We're looking at a 5 minute chart specifically over the last day. So when we take out a low, to me, that's a bearish market structure shift. So automatically I'm looking, and I have my fib set. What was the high of that swing and what was the low of that swing? So when price does retrace back up into discount, which we did, we got right up to 50% with right just above it. And obviously that aided in tanking the thing as well. So bearish trend, retracement into discount, specifically a discount bearish imbalance, and we had the new week open gap. So there was a lot there. So of course, again, I didn't take this. I took the long into this, but one thing that would have been totally difficult for me in this particular scenario is that we had a huge range on NQ, right? And if you're trading QQQ, SPY, Apple, Tesla, Nvidia, when you have, this setup on other names, it's not going to be as difficult to, I guess, stomach where your stop is going to be, because the money is just so much different, right? So if I was trading this and I had my entry right at 50%, right? So 14,677, and I had my stop loss placed at the high, or I'm sorry, not the high, above the top of that bearish imbalance that came down at 930, that would have been 14,734, or I'm sorry, 734. So that's 60 points. That's $1,200 I'd be risking on NASDAQ. That's really difficult for me to justify. Now, if I did take the short and I let it run the way that it did, it went down. What did we end up moving down? 677. And let's just say the low of that little price run, 455. So I would have netted, 220 points, which is a shit ton of money. But that's a big range that you're playing with. And personally, let me just see if we had within that 1 5 minute bearish imbalance. Let's see if I can find a smaller 1 minute one right over here that I could use to kind of steer it, and not have taken out so much risk on this thing, because it is a pretty damn big range that oh yeah, look at this. All right, if you're looking at NASDAQ, check this right over here. So we do have a 1 minute bearish imbalance that we perfectly respected right at the high of it was 14,680. And the way I look at that is, rather than take the huge 5 minute, 70 point risk, I can split that thing up into multiple attempts sometimes, right? I can try the first imbalance. If that doesn't work out, I can stop out there, look to the next one. And that's what happened to me on Monday, actually. We talked about it, but I got stopped out the first attempt, and I felt strongly that we were going to move down. So I ended up waiting just a tick higher into the next imbalance, and then I shorted from there, and I ended up making, my stop ×5 back on the trade. So, I mean, really looking back on this, obviously it's so easy. Like, anytime we look back on it, it's, of course, it's a layup. But this was really a beautiful short setup with multiple layers of, um, I guess, what's the proper word?
Confluence.
Yeah, multiple layers of confluence on this one that really played out. I mean, I know we had Powell speaking. I think a lot of times all of this, when you hear like things like that, Powell's talking at 4, or we have this tomorrow, like it's almost like, that's in your head, and that just kind of it's there to throw you off, which is terrible. You obviously don't want that, but it's like, you overthink things at that point instead of just looking at the chart and seeing that, they're handing you, a gimme at this point. But um, you know, typically I would never have even taken the trade that I took today that long, but I am working on something where I can, adjust and not just be, I don't want to say a one trick pony, but I feel really good about my one model. If I can add something in to catch the move off of the range setter or the low or the high, right, to get us back up into that, or that back down into that discount range, to me that's a layup. That's perfect. Now I have two layers of strategy that I can map within one range, and if it doesn't work out, I'm able to justify it, why it would make sense, why wouldn't it make sense. But if anybody has any other questions or anything, feel free to just pop up. It's pretty loose up here, but
One more question, Mando.
got it, man. Thank you for
So let's say, right, the move happened, et cetera, et cetera. So just to be clear, if now you wanted to capture the short setup again on the retest, explain to me your setup now that you'd be looking for. I think I've got it right. We broke the low, so essentially it's a bearish break. Are you looking for the golden pocket retest, or essentially discount and an imbalance in discount? If am I right?
Yeah, I'm again, like, you know it better than anybody. I'm like very, very particular when I press the button and when I don't, right? And if you look here, right, I actually have it up there, right up in the my model thing. If you click on that and you zoom in right around that zero line, right? So after taking that swing low and creating another, bearish market structure shift, I would then have my fib set to that high that we made at 1105 when we got into the bearish imbalance and discount, and I would have it at that low, or at 1205, where we started to make that little curl higher, right? So in this situation, yes, if you look, we perfectly got into that bearish imbalance and rejected again, but it really wouldn't have met the criteria for my trade. Again, I like it when it gets up into discount, and I don't really like to shorten premium. Did I miss out on a big opportunity today? Yeah, of course. But just think about the risk reward on it. What would make more sense? Taking a short with a really, really, and realistically a short stop loss, or taking the short and let's say we blow past that level, and then you're just like, oh, I really hope it rejects here, or now I'm in double the shit. That's why I would just rather be much more particular. Like, every trade I take, I want it to either be the fastest stop out of my life or the best short or long ever, right? I just want the risk reward to be perfectly, I guess, mashed up, where there's no room for anything that can kind of throw you off, I guess, would be the point there. Like, I wouldn't want it to pop a little bit and reject like it did here, and then let's say the next candle rips higher. Now, one, I stop out on a trade that doesn't even reach the criteria for my own model, one, so that's going to be mentally taxing. And two, when price gets up into that, I'm probably going to try it again. And if we do, just, is that the reversal spot? Did we take out a higher time frame level in which that would tend to create a reversal higher? Then I'm really screwed. Now I have two stop outs. I'm caught in quicksand, where I'm just hoping the next level is going to be the one where the rejection comes, and it might never come. So that's why I'm just trying to be as pinpoint and particular about where I'm entering. And I think there is more to be said about not so much the entry, but are you on the right side of the trade? Of course, but where do you think price can go to, and and that be a good spot to take your profit? And that's why I use like the concepts of liquidity to kind of guide that for me, because without that, I'm looking at the imbalances, and you're not always going to necessarily find an imbalance all over the place on every time frame, but having those swing lows, it is a big help. So does that help answer that, Teddy?
Yeah, that's perfect. Thanks, man. I really
Yeah.
appreciate that.
No doubt, man. Thanks for popping up and asking. Again, if anybody else wants a mic, just feel free to, what do you got to do? Raise your hand or something. I'm gonna look at the comments real quick here and see if anybody had anything. Oh, perfect. James, do you mark imbalances after hours or just RTH? Yeah. So I'm a big advocate for marking your imbalances all throughout, and that's why I chart on futures. Even before I started trading futures, I was charting on futures. You get a lot of levels in that overnight time span, right? Just because we're asleep here doesn't mean that places all over the world that has a ton of money that are also trading our markets, they're not influencing or creating some points of interest in that overnight session. I even do it when I chart, like when we get into some of the individual names, I'll show you. But with Apple, Tesla, Nvidia, AMD, I'm also charting those overnight levels. You don't always get levels that form, but to me, having them is great, because versus having this big gap, I have specific points, right? So again, me being a very shorter time frame trader, I want to be as precise as possible, because my stop is going to be tighter. I'm trading with more leverage, right? I'm trading something like NASDAQ, which it's very it can turn out to be a lot of money if you don't trade with stop losses. I mean, it's borderline psychotic to do that on NASDAQ. But I have to be as precise as possible. Look, if you're swinging and you're looking at a gap for a rejection or something like that, and that's where you wanted to enter your trade, it's a little different. You're not looking at the most pinpoint precise entry as you would, but because it's into a specific point, you just want to get in because you have a feeling that price will reject from that point. But if I'm looking at it from, all right, I'm taking this trade and I'm looking for it to drop within the next 15 minutes or something like that, you want to be pretty damn precise. You don't want to buy the entry of that gap and not have that level that's at the middle of the gap range. Then we trade up into there. You might stop out, price reaches right up into that level and rejects from there, and you're going to be so pissed, and it's going to completely throw you off for the day. So that's to me, that is I would highly encourage everybody to look at those overnight levels, whether you're trading anything. Of course, if you're trading in equity, you're not going to get that complete overnight move. You're going to get market opens at 4 a.m. Eastern, so you're going to have a gap from 8 p.m. to 4 a.m. So while on futures, you're not. Futures, you got 1 hour for a potential gap, and when it happens, they usually are pretty strong, like we just got on NASDAQ. Oh, sweet, Ryan. Ryan, if you're in here, please come up. But yeah, Ryan. Yep. So if you look in the comments of this space, you'll see retrades. He kind of outlined again with the 3 layers of confluence on that short that went down today. Yeah, Paris. Let's see. Are you still in here? I'm just going through the comments right now. Yeah, Paris is here. Okay, cool. Yeah. So what I mean by the new week open gap, it's a futures concept, but I'm sure it can apply to anything. But again, futures running throughout the week. It's 23 hours a day, 5 days a week. So you're only getting 1 hour each day to actually create some sort of gap. And that would be the new day open gap, right? But if you look over the weekend, that's the period of time with the most downtime for futures. So you're closing up shop at 5 p.m. on Friday night Eastern, of course, close Saturday, and you open up Sunday night at 6. So you have essentially 2 days for a gap to form. And again, it's a powerful level. It's something that I've back tested, and nothing that I talk about here is something that I created by any means. Yes, the trading model that I use, of course, but they're still not my concepts. I didn't create any of this. I just want to put that out there. It's all stuff that you can learn as well. But yeah, the new week open gap, man. I give it a shot. I'm not telling anybody to trade off of anything, but just as another added layer of confluence, if you want to throw that on and just see how price reacts to it, you'll notice that it's a pretty powerful level. No problem, Binky. I just saw your thing. What happened to Meta? Yeah, Meta shit the bed, man. It had earnings, but I'll click on Meta real quick and just see. But I don't really trade earnings, so Where's Meta? Let's come on over. I got it on here somewhere. I'm sure we took some sort of higher time frame high because we did run back up after that first knife. Yeah, we did. Yep. So initially, oh wow. All right, I gotta post this one here. Just so you guys can see, it's pretty interesting. And exactly where price closed as well. So hold on, I'm gonna post this up here real quick. Again, if you guys got any questions or anything, comments, whatever, if you want a mic, just request it. And here, I'm posting Meta now. Here, and I can explain this one to you. Okay, let's see. All right, we just posted it. I'll just go to my page real quick and flip it over. But we can look at this one first because obviously that earnings, that was a pretty tough move on earnings. All right, I'm sharing it up top now. All right, there it is. All right, I just shared it on the top. But yeah, so looking at Meta, again, earnings, it's, if I'm going to gamble on something, I would rather do it on sports. I'm not going to do it on earnings. But if you notice, I had that blue line there at 288.19. That was a recent swing low or sell side liquidity. So liquidity was swept. We got that move higher, took out a couple highs in the process, and then we got a meltdown. And if you look where we closed right on that liquidity level at 288.19. So it's pretty crazy. But, to me at this point, for it to remain bearish, I'd like to see 284.10 get taken out. That's the swing low of that earnings candle. But the way that I would ever look at something, I don't really trade them at this point. But in the past, when I would trade something post earnings, it would be almost like a range break. So I'd be looking at the high of the earnings candle and the low of the earnings candle, and whichever was breached, that would give me my bias. So for example, if we take out that low over there at, what was the low of that candle? 284. If we take out that low of 284, that doesn't mean that, it's not like it's a trigger, I'm going to automatically short it. But taking that's your bearish market structure shift. From that point, I would look for a retracement up into your discount of the range, so above that 50%, and I would look to short it up in that area, and vice versa. If we get a move higher than, what is this, 316.05, I would wait for a retracement down into discount, and then look for longs. But yeah, I think they crushed earnings, so that's pretty interesting. I just think the market's heavy at this point. I don't really think any earnings stuff matters too much. But Teddy, you had another question, man?
Yeah, what's up, man? Hey, I heard a couple times that you were looking for, all-time highs or et cetera. Is this a move like today where you would sort of remove that bias and you'd be looking like, is this something that would change you to now be looking for more downside?
Not quite yet, man. It sounds crazy, obviously, thinking that we would end up getting to all-time highs at some point, especially this year. But look, the way that I look at it, and of course, I'm not really trading off of that large of um, a time horizon. I don't swing trade or anything like that. I think it's much, much too difficult to do that right now. Just with, who's to say that market closes Friday and then an hour after market close, something goes down somewhere in the world and you're trapped and you have a substantial amount of money parked in something that you literally have zero control over. To me, not with it right now. But going back, just to answer the point that you had, this year it's still been bullish, right? The way that I have the range mapped out right now is from the lows at the end of April up to the highs of, what was it, like July-ish, right? Let's get the exact day. Yeah, like July 19th high. Right now we're in discount of this range. So the first test was back in the last week of September. If you remember, we were hovering right on that 50% mark before early October. We ran it up a little bit into 15,466, and that's when we were on live and we called that short. We ran up right into that 79% retracement level, bearish imbalance with it as well. And then we, this has been the melter move to continue this bearish trend. So, I mean, and this is another thing. Look, you see all these people on Twitter who are posting all this stuff, right? And whether you've been in it now or I'm sure you're going to see it. There's going to be times where one day somebody says that they're bullish and one day somebody says that they're bearish, and they're the way that they get around it is because really all we're doing is continuously creating trends on different time horizons, right? Right now we're in a bearish trend, right? Inside a bullish trend, inside a bearish trend, inside an overarching, from the dawn of time, a bullish trend. So they can kind of, paint the image however they want, and they can cheerlead whenever they want, because at one point or another, they're going to be right. It's just, a matter of how they portray it. So, it's hard to say at this exact point. Obviously, we're down. What are we down? 2,000. We're like down 2,000 points from our recent swing high, at least. But, to me, if we're going to have any sort of serious crash or something like that, I think it would just make a lot more sense for those all those shorts that took out at the all-time highs, that we sweep them, trigger all those stop losses, generate an extreme amount of liquidity, and that would be the move to really send us down with some speed. Again, I'm looking at it right now. I have two more bullish imbalances on the daily time frame. And then then we get down into some scary scary levels where we take out that 13,163, which doesn't seem so far away at this point. That's terrifying. From that point, do I think that we can have like a serious bounce? I do, but that bounce to me gets hammered back much lower at that point. So, I just try and break it down as much as I can into, almost like time horizons, So on the overarching scale of things, like this year has still been bullish, but, most recent trend, since really the end of July has been pretty bearish.
Yeah.
That makes
So is there any particular event or a particular price that would be concerning for you? Since I know that you're searching for new highs,
Yeah.
and obviously I still believe that's possible, but in these events and everything right now, I mean I'm totally bearish. So I'm wondering if there's any event, or if there's any, like I said, price where you would sort of be like, well, maybe I should start looking for a short bias, or is there anything?
Oh no, yeah. So I mean, my bias is not created on this overarching bullish trend that we're in by any means. I'm very fractal with it. Like, for example, the swing range that we've had from October 12th down to, obviously, open of futures today. That's a bullish bearish trend. I'm sorry. So I really do have a bearish bias at that point. But again, if I'm just bearish at this point, there's going to be a reach, and when they hear, what is the term that they use, bear market rally, right? You get that bear market rally. To me, all that is a retracement into discount, and that's a place where I could look to short it again. So that's why I'm overall, it's kind of hard to be bullish on anything that's going on in the world right now, to be honest. But just looking structurally, the real level that's extremely concerning to me is 13,170, which is 1,200 points away. But that's really terrifying. But until that point, I'm just going to play it in that fractal mindset where, is the trend bearish here? Yeah. When would the trend that we're currently in right now turn bullish? Not unless we get over 15,468. That's the swing high that we shorted on live that day, October 12th. So we'd have to have a market structure shift back bullish for me to have, any hopes of any all-time high or any end of year rally or anything like that. But does that mean that I'm going to be uber bearish here after we just dropped? What did we drop? 1,100 points. No, I gotta keep it tight, But yeah, no. We got SGA popped up here. What's up, man?
Hey, what's going on? So I mean, you kind of already kind of touched upon it, but um, from what I know, you're predominantly an intraday trader, and correct me if I'm wrong. But does that kind of affect in any way, like the whole general picture? Does that affect like your intraday trading? I know you just said like, if it sells off during a certain point, we'll
Sure.
get those bear market rallies, and it comes back to retrace. Because I've had the Nasdaq and this channel since about, yeah, I mean, since over the summer, about July. And then when it rejected that channel again in September, and then recently again in mid-October. And after tonight, after our movement, it kind of fell out of that channel. So
Right.
yeah, I mean, just generally, would that like affect your intraday trading, like just the overall general picture of the market, or?
Sure. Yeah. No. So, I also did a video on this that you could check out as well for, if I maybe miss out on some of the things you're looking for. But really, everything that I do it's top-down analysis. So every Sunday night, I start at the weekly time frame. I also look at the monthly time frame when a new monthly candle paints, completely. But I'll look at the weekly time frame and just, to me, as you know from being in the group and stuff, is I look for the key swing highs and lows, which I would mark out as my liquidity levels, right? If we look at those swing highs and lows, uh, let's say, for example, a swing low, right? If we're looking at a swing low, what had to have happened at that point for that mark to be set as your swing low? People obviously had to go long at that point, right? That's logical. That's the only thing that would really make sense. So I always have those marked out, knowing that if prices to break below those, it's going to trigger a lot of stops in the process, and that generates liquidity that can give you that little bouncer. But then I'll move into following the weekly. I'll have some weekly levels that I'll have in mind, right? And I have it on a chart just 2 tabs over. Then I look at my weekly. What weekly level are we approaching here that would make sense for us to hold, right? Currently I'm looking at NASDAQ, and while we did, like you said, you had a different type of indicator that you're using. But to me, while yes, this move that we just got right here on NASDAQ did break below my bullish imbalance that I had, I'm going to want that candle to close and kind of separate from that level before I make uh, any decisions based on it, really. But again, I'm looking for those higher time frame draws on liquidity. So whether it's a weekly, a daily time frame, an hourly, I'm looking for where are my swing highs, where are my swing lows, and where is price likely to gravitate towards. And again, from that point, are we in a bullish structure? Are we in a bearish structure? And that's really how I map out every trade that I have. It might sound like it's a little complex, but I got to be honest, it's I don't think it can get much more simple than that. I'm really, really just basic with it. And while I do have those higher time frame levels, those are often for me to view them as reversal points. If we have liquidity resting, for example, on NASDAQ at 14,295, prices to get down there, I'm probably not going to use my model to look short again. I'm probably going to let that price run play out and see what happens with it. Meaning, if we take that 14,295, when we start to make that retracement back up into discount of the range, specifically if there's a bearish imbalance there, where I would usually look to short it, I'm not going to do that because on a higher time frame, think about it. If we're looking at a daily time frame, that's one day's full of orders at that point, right? So that low of that candle, that's one full day. There's much more liquidity on a daily candle and then what there would be on like a 5-minute candle. So, that's why I look for reverses at that point. When those lows are swiped, those are triggering orders, right? Stop orders. And when stop orders get triggered, that generates liquidity for the market to actually move. So, in short, to answer your question, I do try and generate some sort of bias from my higher time frame stuff. But again, it really will come down to, did we take out a higher time frame swing, higher low? If not, I look to play my model, the one that I showed you guys on here and I have on YouTube. But on the flip side of that, if we did take out a higher time frame level, that's probably a price run that I'm going to sit out, or even look to, like I did today, look to long it rather than play it short. Because at that point, there's a little more unknown than what there would be generally if we're just taking out like an intraday little swing higher low. There's not going to be as much orders going into a 5-minute candle as there would be on a higher time frame. So if that makes sense, I do think it's valuable to have a bias and to formulate one. But I'm trading much more tight in terms of time. I'm not looking to really take long-term trades, specifically at this point in time with all the madness that's going on. So did that help at all, or?
Yeah, definitely. No, yeah, for sure.
All
Thanks
right.
for that answer.
Yeah, no problem, man. So yeah, James, I just saw you had commented again. Do you use the same theory with midweek gaps up and down? Yeah. So, I don't think many people do this, but one thing that I look for in gaps is if we're gapping up, to me, that's showing me urgency that we want to get to liquidity or a swing high, a higher time frame swing high, quickly, right? That's to me just showing urgency to get up there, right? So I would view that gap as actually some sort of support, right? Now on the flip side of that, when we gap down, to me that's showing me a level of urgency to move lower. So I would look at that level as a resistance level. A lot of people, I think, you automatically think that a gap is going to form or a gap forms and you automatically think it's going to get up there and just fill it right away. And it's not necessarily always the case. While there is a void in that area, there's no like set in stone time where this gap needs to be filled by 4 o'clock on Friday. That's not necessarily it. And oftentimes you'll notice like price will just barely tick into that gap and it'll reject hard. That is an imbalance in price. Any gap is an imbalance in price. So if we're gapping up, that's a buy side imbalance, sell side inefficiency, and vice versa. If you're gapping down, that is a bearish imbalance or a sell side imbalance, inefficiency on the buy side. So it's one way, and that leads me into kind of talking about just imbalances in general. So you see those boxes that I have on the charts, whether it's a large green one or a large red one, those are imbalances. And the way that you can look at those imbalances is within that specific area. Let's use a bearish one just because the market shit the bed today. So if we're looking at it from the perspective, okay, this is a bearish imbalance, right? What that really means is that within whatever that rectangle area was, that specified range, that in that specific point, we are lacking buying interest, I guess you could say, right? So the way I kind of explain it and teach it is we have, you're sitting on a teeter-totter one side, and obviously you're sitting on it. Nobody else is on the other side. So you're going to be on the bottom, on the ground, and the other side's going to be up in the air. Now, every time price gets back up into that imbalance, it's almost like somebody's throwing a sandbag on the other side to eventually balance price out within that range. So that's why when I have them on the chart, and like we looked at, if you on the top bar, if you scroll over to where it says my model, you'll notice price gets right up into that red square or rectangle, whatever it is, rectangle. Price gets up into it and rejects it. That's essentially what we're looking for. I'm not really looking at those as quote unquote support and resistance levels, more as like trampolines or brick walls. I want something to occur relatively quickly following, retracing into said imbalance in price. So I hope that helps, James, if you're still in here. Just scrolling down to see. Thoughts on Disney? Good entry for tomorrow. Let me look. I haven't looked at it yet today. Let's go. Disney was actually pretty sweet following that sweep of higher time frame. I'll post that one as well so you can see what I'm talking about when I post that. But here we go. Ready? Let me just zoom out and make this a little more clear. Yeah. So on Disney right now, we're currently inside a bullish breaker. And this particular setup really, it depends on your own personal risk. Hold on, let me just screenshot it really quickly. All right, let me post it up right here. Where are we? Did I post Disney yesterday? No, I didn't. Here, I'll post it right now. Okay. So we actually had a formation of a bullish breaker, which is another setup that I use. Let me just post it up real quick here. Okay. So posted. Let me just share it inside here so anybody who's looking can see it. Did we load it yet? Let's see. Here we go. All right. So I posted up on the top, Disney. But with Disney, you'll notice price is dipping into a bullish breaker. And what the bullish breaker is a low. And our low was from Wednesday, September 27th. A high, which was October 2nd. Your lower low took place on October 4th. That lower low was actually the COVID low, when the market tanked in 2020. We swept those lows, and you'll see I had like the little tweet there to show, like, time for a bounce. We took out a very higher time frame low, and clearly from that point, after taking that COVID low, I don't even know what Disney's all-time high was, but it was pretty damn high. So logically, at that point, if from that low being set, people clearly had to go long there. So when those orders were triggered, at that specific point in price, we took off. We actually did shift market structure bullish. So if you look at that high that we made, and you'll see on there, I have above 8619. That is our bullish market structure shift. So market structure did shift actually, as we're retracing back down into this newfound bullish range. To me, at this specific point, you're right on that 0.79 retracement. So this is like an ideal location for me to add, just knowing that my stop loss is going to be below, 78. Because if we take out that swing low at 78.73, that's where the bears win and market structure shifts back to the bears. So essentially, like at this point, your risk is, $1.50 for, back to the highs in itself is $6. So $6 for $1.50 risk. That's the way I look at a lot of these trades. If I can justify it in terms of like what the possible risk reward would be on them, does it make sense for me to take a trade like that? Then, to me, it's a no-brainer at that point. So that's why I say, it really relies on your own risk reward. I mean, obviously the market does not look healthy whatsoever right now, but if we break it down into more of a individualized name, it's really not too terrible. But I hope that helped a little bit there. Let me just go back to the comments and see. Again, if anybody has a question or anything and wants to grab a mic, just feel free. Oh, cool. What's up, Mohammed? How do you judge when to enter a trade after an imbalance is hit? Is it based on price action, or do you have limit orders set to go? Yeah, so that's a really good question too. So, and what he means by that is, do I just set the trade on the screen and walk away knowing where my entry is going to be, where my stop loss is going to be, where my take profit is going to be, or do I manually intervene? Again, this actually goes back to something that we talked about a little while ago, where upon like realistically, having again the daily bias, to me it's huge. Again, is it always going to be right? Not necessarily. But is it always going to be wrong? Not necessarily, right? So the way I kind of map that out is, if I'm on side and I'm, let's say the market is moving higher and I had a bullish bias into the day, I'm a little more free and easy with placing, my limit order at a specific point, having my stop loss set, and letting that thing ride. What I've been doing more recently, and actually I just saw Sean throw up a thumbs up. We talked about this today on there, how when I'm off sides, or, because being off sides, that doesn't necessarily mean that I'm automatically losing the day. Like, you can be wrong on your bias and still have a green day. But if I'm off sides, or I'm not so sure, I'm more of like a neutral bias where I don't really know. I can justify both, but I can't really come to a conclusion on my own. And the reason why I couldn't do that today is because both dollar and the indices were moving higher yesterday. When that happens, somebody's lying, and it's not the easiest thing to tell which one is which is lying, which isn't. So from that point going into today, I knew that I would much rather see price get into one of my imbalances and actually start to leave. Show me that it wants to leave. I'm okay with missing out on a couple points, but I would prefer not to get stopped out on something that was totally preventable if I just waited, right? It happened to me on Monday, actually. Let me see. Did I post the trade I took on Monday? I'm not sure. Let me just see real quick if I did or didn't. If I didn't, I can... Actually, I don't even know if I did the edits on it yet. Whoops. Yeah, I didn't even do the edits on it yet. But anyways, if on Monday I got stopped out on my initial short, and this was the afternoon. Let me see if I could just go back in time. Actually, that would make a lot of sense to do, and I'll screenshot it and post it. But I actually got stopped out because my stop was relatively tight, and I had the order set and put my stop loss at the high of the imbalance and left it, and I let it play out. And while sometimes it's fine and dandy, it's great. You don't really have to worry about it too much, but that's not always going to be the case. So I had to pivot. So after getting stopped out, I think I stopped for like $150. It was Monday? Right over here. Yep. So Monday was actually a pretty strong day, believe it or not. Where are we? Right over here. Yep. So we got into a bearish imbalance on Monday, and the wicks reached above, but bodies never closed. The trade really never went against any bit of my strategy. It was just the wicks that got me. So if I just waited, like I did the second attempt, just for it to get on into it and show me that it actually wanted to leave, that's when I ended up slapping it, and I crushed it. What did this end up going down to? I'm just going to draw it out real quick for you. Where is it? Right over here. Right here. Boom. Perfect. Okay, I got it. I'm going to screen grab it really quickly. But you'll see, I wasn't wrong. I just got wicked out, and it sucks when you wick out. And again, if I was trading something like Apple or SPY or QQQ, I would be fine with it. I wouldn't be sweating it too much. But let me just type this in real quick. Where is it? Imbalances. I'm gonna just post it in here so you guys can see it. But it was just the total wick play. And if I just waited 2 seconds for it to, actually show me that it wanted to leave this particular spot, I would have been fine. I ended up being fine, but it's not always necessarily going to happen that way where I feel strongly about it. But if I hung out in that trade and we ended up running to swing high, my stop loss would have been probably like $650, and the gain that I was looking for on the trade was, I think it was only like $700. So that wouldn't have made sense. So that's why I was much more tight and strategic with it. I just posted it up top, so you see that red imbalance right there, and how bodies perfectly respected it, but the wicks got up, stopped me out of my first attempt. And when I saw that thing start to come down and show me that it actually wanted to go lower, from that point, I was good to go, and it ended up playing out more than fine. So I ended up making up for that stop out, and making more money on top of it. Let's see. Does anybody else have any questions or anything like that? Let's see. I just saw those after hours. I hope that helped, Muhammad. I know you're listening down below, but what else? Teddy, you got anything else, man? SGA.
Mando, if you have a quick second, actually, do you mind going over some defensives, either Raytheon or Lockheed? I think those charts look really interesting, especially LMT.
Yeah, I like Lockheed. Real quick.
Huge.
Yeah. So
liquidity grab.
Look how crazy this is. This is another a funny one from a couple weeks back. But if you just type in or you search at Mando Trading with the money sign LMT, you're going to see my chart from a couple weekends ago when that whole Israeli-Palestine thing started kicking off, right? It's just like so ironic that we hit a perfect bullish imbalance and we absolutely erupted off of it. It was to the tick perfect. It's just funny to reference, but let me do LMT really quickly here. And if anybody else has any other tickers that you're looking at for tomorrow and you want me to draw up, just let me know. I'll do it right now. But okay, so Lockheed right here. Yeah, Lockheed. Nice. Okay. So right off the bat, again, I'm seeing that large gap up following that Israeli news perfectly off the bottom of a bullish imbalance that we had. Let's see. Okay, so I'm also looking at Tuesday, September 5th. We gapped down on that Wednesday. And that previous bearish imbalance, we rejected it once, twice, 3 times, and 4 times. And after the 4th time, we claimed it and actually are now using it as support. So I like that. That's a great eye by you there, just identifying that in the first place. Let's see. So really, to me, draw would be, let's see, what is it? 457.99, which is about 10 points higher. I'm just annotating this as we go here. And we have another daily swing high at 479 right here. Let me just draw out this other big gap right here. Boom. Okay. So again, do I miss trades because of my very I don't know what the word is, like strict nature to take a trade? Yeah, of course. But from this point, I'd personally like to see it take out 457.67, or trace back down into a discount bullish imbalance, and then look for that move up to 479. Now you have potentially 10 points on this. So again, that comes down to your own, risk tolerance, to me at least. And at this point, it would be, potentially 10 points with my stop would be like $7 below. And that would be the low from Tuesday, in which we held the bottom of this previously bearish imbalance as bullish. So let me map it out for you at least, and you'll be able to see it here. All right, I'm going to post it right now. So yeah, Lockheed, that's a good eye by you, the way that we used a previous level of, resistance as your or here, I'm posting it right now.
Yeah, plus, as you said, I think you've said this before too, like just how it's always news that kind of precedes it,
Yeah, I mean, it's usually actually a couple years ago, I had somebody, really really smart dude who I used to trade with all the time. He's actually like a big shot at one of these big companies. I don't even know if I'm allowed to talk about it, but he's a big shot at these companies now. And he was talking about when he was learning how to trade, and he was talking about how there was a list of like 10 names that typically front ran the market or the indices, I guess you could say. And Lockheed was one of them. And Lockheed is typically a an inverse tech type name. It's more of a safety net because there's a ton of government contracts and uh, you know the whole thing. But LMT was one of them actually. Adobe was another one for tech. Adobe Tech typically front runs a little bit. For the energy sector, it's PXD, which I know they just got bought out, so I don't know how that's going to shake out. There was another one, Restoration Hardware, ironically, was another one that front ran. So there was just a few weird names that you never would have thought. And when he says it to me, obviously, I like calling BS on everybody, so I'm like, yeah, okay. And they're like, oh wow, it really does kind of foreshadow. And not that they're making these huge moves, but it's enough to kind of be like, oh shoot, that makes sense. I mean, think about it. The move that we recently had on SPY or NASDAQ, like, when did it occur? It occurred right when Lockheed gapped up 30 points last or 2 weeks ago, whatever it was. So here I just posted it up there now, so you'll just be able to see what I got there. And here, ready, there it is. All right. Let me just go through some of these mentions and see if anybody else said anything. Somebody said that Meta looks good. Okay. No, I just have a few left to tank. Yeah, everybody's bearish right now, man. Which I think it's fair. It's just at a certain point, and it's not like me like trying to. I'm not really that bullish for all-time highs, like Teddy was saying before. But it's like, at a certain point, there's gonna be a bear market rally where we move, and we probably move pretty quickly to get back up into discount. So let's see. Anybody else? Oh, thanks, Anthony. I just saw your tweet there. Let's see. All right, I think that was all the comments at least. Does anybody else have anything else or questions or anything like that? If you want a mic, feel free to, request it, bring it up here. But
That's probably it for me. I'm eating now. I'm eating some dinner, so I appreciate it, Mando. Thanks for answering all my questions.
yeah, no doubt, man. Thanks for popping on and talking. Appreciate it. But
Yes, sir.
but let's see. I mean, I'll go through. I'm just gonna go through a couple of these real quick. If you want to stay, great. If not, don't worry about it. Let's look at Apple. People like to trade Apple, yeah. Apple's been like a mirror image of the S&P, so I'm posting that up top right now. Let's see, Apple 30-minute. Why do I use the 30-minute? No reason in particular. I like it. I think it's great. You can use the hourly. You can use any time frame you want for using these concepts. But okay, so Apple took out swing low from Monday, October 23rd, with the move. Actually, after hours move. So of course we are in a bearish trend on Apple. Now, here's my next question. We took out that swing low at 169.93. Do we need to take the low at 169 flat, which was from a while ago? Really long time ago, actually. Yeah. So that to me, actually we have it right here at 169.27. Okay. So I just annotate that 169.27. So from that point, look, do we take out that swing low and that be the mover? Maybe. And that's why I try and say, I don't try and buy those I don't try and catch perfect bottom. And it's just because like I don't necessarily know what the exact low is going to be. If you zoom in on that Apple image that I posted, at 18, I don't even know what it's 6:12. Yeah, so like 6 o'clock, that down move that we got, that big strong move lower, we got into a bullish imbalance. But look, if I went long at that point, 2 candles later, so an hour later, I'm already stopped out on that sucker. So that's why I wait for that imbalance to form. before giving me any confirmation that we're gonna move higher. I try and avoid longing in bearish trends and shorting in bullish trends for that reason. It's, to me, I don't know what the range low is going to be until really we get to 50%, and from there, that's when I look to play it in the direction of the trend, which would be in this case bearish. And the 50% mark on Apple is 171.18 at this point. So, what is that? $2 away. That doesn't necessarily have to happen tomorrow. It could happen at some point, whenever, over the next week or so. But I don't personally know this is the low. So if we got to go down a little lower, so be it. But I'm not going to be getting stopped out on this thing in the meantime, or bag holding it either. Let's see what else we got. Tesla I posted. We can look at Tesla too. Putting it up top. So if you look at Tesla, believe it or not, Tesla's market structure is still bullish for now. So we did take out higher time frame liquidity from Friday morning, which was 221.18. And if you look at that, it's that one blue line. You'll notice that we reached above that blue line and immediately pulled back. So that's what I mean by sweeping liquidity. We're taking out all of those stop losses on those shorts and using that liquidity to generate more downside. So as you can see, we rejected there. We actually have another bearish imbalance on Tesla that I don't have marked on here that we rejected. And that was from Tuesday, 10:30 a.m. and then commence the melt. So on a really short-term view of this, Tesla obviously bearish. If you zoom out a couple days, here's the bullish trend, and we're hanging on for dear life onto this bullish imbalance here. Not necessarily convinced that this thing is going to hold up, to be honest with you. And the fact that we have no imbalances below, it could actually be a pretty swift move down towards that 202.51. And I know, I don't know if Ivan's in here right now, but Ivan was talking about that before. So that's another one on Tesla. NVIDIA actually just swept today. So if we look at NVIDIA, swing low at 409.45, got swept in this after hours move just now. So to me, market structure is bearish on NVIDIA. And I actually wanted to talk about this one because this one's a perfect little, I guess, quote unquote SR flip. So if you look at the imbalance from Monday at 11:30, you'll notice that throughout Tuesday, we bounced off that level multiple times. After we took out the swing high from Tuesday with that 4 o'clock candle on Tuesday afternoon, we've since just gone down. So we swept liquidity, took out the stop losses, created liquidity to drive us lower. And since then, obviously, we melted through that level and clearly melted down there throughout. Now, again, do I know this is the low? Not necessarily. So what would be the indication to scalp long on this? I'm waiting for some sort of imbalance to form, whether that is a bullish imbalance to the upside, a bullish breaker to form, a bullish volume imbalance, which would be a gap higher. So until then, unfortunately, no interest. I don't even have interest on the downside in this situation. The range is huge. We've already moved. What did we move on NVIDIA? $30 in 2 days. To me, shorting this is overpaying for your shorts to, I guess, say it, as clear as possible. But so that's NVIDIA. I just like how you could see how clear it is that previous support level that bounced multiple times, or as I would like to call it, like that trampoline effect. You got it twice, and then following taking out a higher time frame swing high. That's what generated that reversal lower to sweep the low. But so yeah, I mean, it's tough. We're in a position where I guess common sense would tell you that there's got to be a balance at some point, but where? And I'm not trying to pick out absolute bottoms and absolute tops. I think that's just, you're kind of asking for a stop out express in that situation. But let's see. I also posted AMD. AMD is a total meltdown here today. Rejection off of bearish imbalance from Monday at 2:00. Perfect. We wicked above it just like we did on NQ, like I was talking about that trade I took before. Yeah, Teddy, stop out express. I've been there. And then you get that move lower, another bearish imbalance generated after hours on Tuesday, and then let the meltdown commence. Obviously, what did we drop? Like 10 points today? Holy crap. AMD got smoked. Swing low on AMD, 93.45. And actually, I'm just going to zoom out really quickly and look at this daily on AMD, because that last move on AMD I was kind of kicking myself about. A couple weeks ago, I tweeted that I wanted to look into scooping up some shares on AMD, but I needed it. I think it was at 93. Let me just see this really quick. I'll post it if it's right. Let's see, where are we? Oh, yep. Okay, yep. So I have my alert for AMD at 93.42. That is a bullish imbalance down at the 0.79 level. That would, to me, pretty much map it out. And my trade map would be, I'd be risking about $3, 93.43 to 90.43. For potential target 1 being 104, target 2 122, target 3, and obviously this is a long term type of play that I would like to get into, but we'll see how that shakes out. But I'm seeing people typing in the group right now. Oh, Pizza, you called it. Nice, man. Yeah, I'll be live trading tomorrow too. Yep, no worries, Seeker. I'll see you. But yeah, no, this is I think that's all I got. So if anybody has any questions about anything, feel free to shoot me a DM or, tweet me or something. But we're gonna mix these in probably once a week starting now. So I hope it was insightful and you picked up on something. But this is literally just the model that I use for every trade. It's as simple as can be, and I try to make it simple, because when I try to overdo it, I feel stupid. So much rather have easy trading and not sweat it out like I had been in the past. So but all right, I'm done. So I'll catch everybody on Twitter tomorrow. Thanks for joining, and Teddy SGA, thanks for popping up. I'll catch you guys later.